Ladies and gentlemen, I welcome you all to the H2 and FY25 post-earnings conference call of Baheti Recycling Industries Limited. Today on the call from the management team we have with us Mr. Yash Shah, Joint Managing Director, and Mr. Manoj Shah, Chief Financial Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to detail us about the business and performance highlights for the period ended 31st March 2025, their growth plans and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Hello, good afternoon to all of you. Hello.
Yes, sir. Please go ahead, sir.
Yeah, please. Myself, Manoj Shah, CFO, Baheti Recycling Industries Limited. And today here we are presenting our financials performance and key highlights for the financial year 24-25. If you look at the slides, we're showing the half-yearly results of last half-yearly results of 24-25, which compared to the first half, showing the 20% healthy growth in our sales. Our EBITDA margin in compared to the first half is increasing the 91.3%. PAT is increasing 155.7%. It's all compared to first half to last half. EBITDA margin is increasing by 337 bps. PAT margin increasing by 221 bps. And EPS increasing by showing the healthy growth and increasing by 158.7%. Hello, Mohsin ji, change the slide.
You're on your.
So this is for the full year, if you want to go ahead.
Yeah. And this slide showing the full year financials, which showing the 22.1% top line growth in compared to the previous year. So sales is registered as sales growth is 22.1% for the financial years 24-25 compared to the last year. EBITDA margin is increasing by the almost 100% compared to the previous year. PAT margin is increasing 150%, which showing the healthy growth in the compared to the previous year, which showing 150.1%. EBITDA margin is increasing 337 bps. PAT margin is increasing 221 bps, and EPS increasing by 150.1%. It's all parameters compared to the previous year. Regarding the capacity utilization, for the financial year, company registered a utilization of 64% nearby. Actually, utilization is looking lower due to the capacity expansion and the new TRF which one is installed in the year 23-24 is running in the current financial year 24-25. So in coming years, it's showing the utilization is much more higher than this year.
So, as we have mentioned earlier also, I myself, Yash Shah, Joint Managing Director of the company. And as we have mentioned earlier also in our post-earning call presentation, we are closely looking to the way forward in zinc alloy and aluminum billets. And it is under process and it will get completed, mostly it will get completed by this financial year end. And our growth has increased, our sales has increased, entering into new geographies of South India, which is one of the automobile hub in India, and we are looking forward to penetrate into the countries like Hungary, Turkey, which we are in closely talks with the companies. And for the upcoming next 5 years, we are targeting a annual growth of minimum 15 to 20% for the upcoming 5 years. And this IITF certificate, the upmost certificate, will get by the month of June end, which will help us to enter directly into the big OEMs, the car manufacturers like Maruti, Bajaj. So it will again help us in increasing our volume because these players are having a lot of volume in that. So, Mohsinji, I'll like to open the floor for Q&A because it would be much better as business. Everyone knows our business, and
Sure.
it's better that we have short time and we can
Yes.
answer questions.
Sure. Sure. We'll begin the question and answer. Anyone who wishes to ask a question, please use the option of raise hand.
I think so. One has
Yeah.
already raised his hand.
Yeah. We'll take the first question from Agastya Dave. Please go ahead.
Hello, am I audible?
Yes.
Yeah,
Yes.
yeah. Hi, Agastya.
क्या हाल यश भाई यश भाई a few questions एक तो मुझे वॉल्यूम का समझ में नहीं आया एक्चुअली we are flat YOY so I understand the utilization numbers are looking low because of the expansion
Yeah.
but our volume numbers for the entire year are flat YOY so if you can explain that and then there was another thing which was slightly off which
Just
was the employee cost
I'll
sure
take
sure
one
sure
by one. I'll take one by
sure
one.
sir sure
How,
sir
how I'm not getting your question. How it is flat year on year basis?
Sir, can you go back to the slide which has the volume? Hang on, I'll
Sir,
also.
basically FY25 volume is 18,610 versus
Okay.
FY24, which is 18,343, which is 1.5% volume growth for the full year.
So flat
Um,
हुआ sir, मोटा मोटी.
can you take to the slide, please, Mohsinji?
Sure.
Yeah, this one.
Okay.
If you look at FY25, what Vinay bhai just read out, these numbers, they are roughly flat. This slight bump up, but flat. So so there were two things. So I will present the entire picture. There were three things which are slightly off from what I understood was going to happen. One was this volume number.
Okay.
Second was so that meant that the realizations really bumped up because your total revenues have grown quite nicely. Those are matching at least what I was expecting, but the volume number is like
I'll tell you
flat.
why the volume number is low because
Hmm.
we have shifted our furnaces from
Hmm.
the upgradation or the new modernization of the plant is going on. So we have
Yes.
shifted our
Yes.
furnaces. Earlier we were running, we are having the capacity, same capacity. Earlier we
Hmm.
were running 4 rotary furnaces, uh,
Right.
which was an old technology. Now we
Right.
have
Right. Right.
eradicated that furnaces and we have shifted to TRF, the tilting
जी
rotary.
आपने बताया था ये
Correct.
आपने you have discussed
So,
this
so,
at length.
so
So I was just
this is because of the upgradation of the plant. The
uh,
volume you are seeing the volume a bit stagnant.
right.
This the upcoming financial year in 25-26 you'll see the volume growth also. The actual capacity utilization will increase.
Understood. So तो
Upgraded.
उसमें my point was that if I take these volume numbers, there were three things which are dramatically off. One
Okay.
is your then average realizations seem to have grown by 20%. So what led to that? And the second thing is then again the impact on gross margin is their gross margins have expanded quite substantially which we were expecting, but over a period of time. But suddenly, the number because of this number, the gross margin just shoots
You,
up.
you
And the
will
third was employee cost has dramatically declined, like 50% fall. It seems that there is some reclassification. So
yes,
I
yes, yes.
so
I
ये मुझे
हाँ,
बताइएगा सर ये तीनों
मैं
चीजें
मैं
if you can group
मैं
together.
आपको एम्प्लॉय कॉस्ट है वो मनोज जी आपको एक्सप्लेन कर लेंगे. आई विल एक्सप्लेन यू व्हाई द मार्जिन हैज इंक्रीज
Hmm.
and what is the dramatic increase in the margin. See, the upgradation or the modernization of the furnaces has increased. There are two factors which has increased in our we are getting more than 2% yield difference from the old furnaces. We are getting
Okay.
2% higher yield.
Okay.
We are having 5 to 7% processing reduction in processing cost because of the utilization of the new upgraded furnaces.
Okay.
We are having a lot of stock, so we have taken the advantage of the price in this year, current year, and because of the scrap going, the scrap, the procurement or the global factor, the war kind of situation between US and China, the trade war, not India
Hmm.
Pakistan, but the trade war
Hmm.
which is going on in the market,
Hmm.
it is creating a lot of problem for the you can say the scrap procurement is getting tough. So
Hmm.
higher stock, which we have changed our policy during the previous financial year, this higher stock has increased us to gain out of it.
Okay, so realizations क्यों बढ़ा सर? ये मुझे
That's what
yield
I'm
side और
saying.
cost.
See, if I'm having something, see that the scrap, the demand and supply again, the scrap
Right.
is less, realization बढ़ने का reason
तो
दो
pass through हो गया वो पूरा.
रियलाइजेशन नहीं 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 रियलाइजेशन बढ़ने का दो तीन चीजें हैं.
Hmm.
The upgradation of the furnaces, the
Hmm.
modernization of the plant. जहाँ
Okay.
processing cost पहले मेरा say for example 12 rupees आता था, अभी वो it has come down to 10 rupees. So if
Okay.
you can see अगर 18,000, if I'm manufacturing 18,610 tons,
Hmm.
2 rupees, it
Hmm.
makes lot of it makes lot of earnings. The
Right.
yield percentage of the product, because of the new furnaces, which is the latest technology, it has given us 2% yield additional. So there are a lot of various
Right.
factors. Why? Because the earning percentage has increased drastically, and the
Hmm.
and as I have told you in my earning post earning previous post earning con call, that the sustainable margin, PAT margin, which I am thinking is somewhere
Hmm.
around 5% in our industry.
Okay. Okay. So we should concentrate then on the sustainable PAT margin then,
Yeah,
because
that
these
is what
numbers
I'm
are
saying.
slightly. Hmm.
But it requires a lot of R&D and everything. But
Hmm.
it is way forward that the sustainable margin can be in any can be in range of 3 to 5%. Yes,
So that is when your capacity is fully operational and the new products that you're working on, जो आपका एक
100%, 100%,
वो
100.
सब आ जाएगा, तो you will be approaching 5%. You have already reached 3.4% for the year.
Yeah, that is this 3.4% to 4 to 5%. It is sustainable margin.
Okay, understood, sir. So then the bit about the employee costs, there is
Manoj ji,
a जी.
Sir, actually, due to the introduction of the labor contractual basis on the
अच्छा.
plant side, it's a
Hmm.
cost showing the decreasing trend, but the
Hmm.
expense is incorporated in the other expenses.
Okay, sir, would you have that number, sir, the labor cost which has gone into the other expenses, the subcontracted labor cost?
It's a more than 6 to 7 crore.
6 to 7 crores. Okay. ओके ओके ठीक है सर. सर एक रिक्वेस्ट है कि जब भी आपकी एनुअल रिपोर्ट आए प्लीज इफ पॉसिबल, सो लास्ट ईयर देयर वाज नो सब कॉन्ट्रैक्टिंग ऑफ लेबर.
Yes, no. Last year, no subcontracting and labor.
ओके
From
सो
this year, we introducing the work contract of labor.
understood. So now as we ramp up, the variable part which is coming in the other expenses through subcontracted labor, that will grow as the production grows, right?
Yes,
This employee expenses will remain the base, and इसमें फिर जो आप increments दें उस हिसाब से बढ़ेगा ये, right?
yes, yes, sir. Yes, sir.
Understood, sir. Understood, sir. So, how about the development on the, sir? Sorry, one more question before that, sir. On the inventory side, slightly higher. So, is it the finished good inventory which is higher, or have we stockpiled more scrap?
raw material, raw material.
Raw
It's only
material.
because
Okay.
of this trade war going on. We are having there is a lot of dilemma about the scrap procurement. So it is better, and because of this just-in-time concept from our customer also, we are having
Jay.
we are getting good premium from them because of timely delivery and everything. So we are keeping the scrap stock at our end to maintain that equality.
Understood. I'll go back in the queue. There's one more participant who's asking question. I have further questions. I'll come back, sir. Thank
Oh,
you.
thank
Thank,
you, thanks.
thank you, Agastya. We'll take the next question from Piyush Patel. Please go ahead.
Congratulations, sir, on a good set of numbers.
Thank you, sir.
Sir, can you please share some H2 FY25, H1 FY25, and H2 FY24 volumes?
Mohsin ji.
जी sir.
Also, sir, can you please explain a bit more on efforts take to improve your production capabilities and efficiencies?
That is what I'm saying. The modernization and the upgradation of the plant, how we are processing raw material. We have introduced many machining part instead of labor part. The modernization of the furnaces, which is at the highest level of the furnaces, which is being which is used in melting at out of India plant, maybe China, Japan, which they are using. We are using that technology. So the upgradation in technology, when we have installed a furnace which we can melt 50 tons of scrap in one day with hardly 7 8 laborers, 7 8 employees. And instead of earlier, it was taking, we were requiring around 50 60 employees for that 50 tons. So this is because of the technology shift in the plant and the upgradation and the modernization of different um, processing of scrap. uh, this is the various factor which we have taken care of, and which we are developing day by day to get better yield, to reduce our processing cost, to reduce our employee cost, how we can shift to the modernization.
Okay, sir, but these volumes numbers are not in the presentation. Can you please share over here?
So they want half yearly volume data.
Mausim ji,
Sir, we don't have it right now with us. We'll get back to Mr. Piyush on this.
Okay, sir. Thank you.
Thank you, Piyush. We'll take the follow-up question from Agastya. Agastya, please go ahead.
Thank you for the opportunity again. Sir, next for the next 2 3 years, what is the capex plan now? Because again, another point of departure from my understanding was that I was not expecting so much capitalization to happen on the balance sheet this year. But at least from what I can see, the substantial amount has happened. So now going forward, how much more will happen? If you
we
can
are
share the capex plan, this would include the solar project that you're doing, the ancillary projects, the ancillary equipment that you will be managing.
I'm not going to that part because I've already explained you that it is under process and it will take time by
It
this
will take time. Okay.
by this
Okay.
end.
Understood.
For,
Understood.
for
Understood.
again, I'm telling you, I'll install one this more upgraded modernization. It is underway, and
Okay.
it will be installed by July or by August.
Okay. So can you quantify the capex plan for the next 3 years? Yeah.
So I've
Like
told you
any ball.
the capex plan for this
Hmm,
financial year,
hmm,
excluding the new plant which I'll be introducing.
hmm.
The existing plant, I have already capex in such a way that the cost of the shade, the cost and everything has been built up by setting up of 4 crores of furnaces.
Hmm.
It can give me an additional revenue of 200 cr.
Understood. Understood.
So the 4 crores furnaces would be in the existing plant. We are targeting around 4 to 5 crores of expansion. That's it.
Okay. So minimal capex in the existing capacity.
Yes, 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 yes.
Okay. Understood. That helps.
And the other two projects are going on. It is under.
So those I'm not including here.
Yeah, those don't include that. That is why I'm saying you that is altogether different part, and
Understood.
this is on the ongoing premises,
And so
ongoing.
what's your generally the maintenance capex for the now the modernized plant? So you have just modernized everything. So I'm pretty sure next 1 साल में कुछ नहीं आएगा. But sustained basis पे what's the maintenance capex that you need to do?
It is less than what we were maintaining earlier because of the old.
Modernization.
Yes, yes,
Understood.
yes.
Understood. One final question from my side, sir. You mentioned that going forward you are targeting at least 15-20% volume growth. So
Yeah.
you have still, if you grow for 20, like even if I take the higher limit, 20% for the next 2 years, you'll still have quite a bit of capacity left. So what are the bottlenecks for you? Like why can you not, let's say, sell 25%? क्या market में इतना ही demand है
Market
या
में बहुत है. We are having that will speak less and deliver more as we are doing like that since long. So that's why we have given a conservative increment of 15%, because see, every the modernization, the technology shift is going on. everything is going on, and we in next 5 years, if you'll say, then yes, we can grow at 25%, 30%, 20%. But these 2 3 years, it's yeah,
Hmm.
15 20% is we that is what we are targeting at.
Understood, sir.
We
So thank you very much for answering the questions. All the best, sir. So you were saying something.
uh, we want to make optimum use of our technology and the shift which we are into it. That's why we the volume, instead of volume growth, we are more focusing on how we can improve our bottom line.
Great, sir. So thank you very much. Sir, I also appreciate that you came out with the results fairly early in the earnings season. It really helps.
We were
लास्ट डे पे लेके आते तो कॉन कॉल भी अटेंड नहीं कर पाते थे. So I really appreciate it, sir. All the best, sir.
we
One
are
one
delayed by
request.
5 days. We are delayed by 5 days. We were targeting on
But still, it's pretty good. Early May. One request, sir.
yeah.
Again, I've asked you this, I think twice. Just a suggestion, sir. If you can do quarterly, if you can present quarterly numbers, even if you release and do con calls once in like
We
half a year.
we are trying on that. Manoj is trying on that, and hopefully, from next half yearly, we'll do that.
क्योंकि
वेट करना पड़ता है.
बहुत ज्यादा वेट करना पड़ता है. और दूसरा, सर, आप काफी कॉन कॉल्स करते हैं थ्रू विनय भाई, बट स्टिल देयर इज अ ह्यूज गैप इन ये. सो पता ही नहीं चलता कि क्या हो रहा है. 6 months
Done.
इज टू लॉन्गर टाइम, सर. थैंक यू वेरी मच यश भाई. थैंक यू वेरी मच मनोज जी. एंड थैंक यू विनय भाई. थैंक
Thank
यू.
you.
ऑल द बेस्ट.
Thanks, Agastya. We'll take the next question from Chaitanya Gadia. Please go ahead.
हाय. आई जस्ट वांटेड टू आस्क, जैसे आपका ऑप मार्जिन बढ़ के 8% हो गया है दिस फाइनेंशियल ईयर, व्हाट इज अ basically you can say a thumb rule of whatever with upgradations you are doing and all, what is a normalized margin that you will take going forward, average, because it's increasing from 3%, 4%, 5%, and now 8%.
See, there is as such, there is no thumb rule as such, but yeah, this is at what we are operating. This is a sustainable margin at what we are operating. So 3.4 to 5%, anywhere between 3.4 to 5% is quite sustainable margin.
Okay, and then this year we had gone to 8%. Any
I'm
specific?
talking about PAT. Sorry, I'm talking about PAT. Huh?
Acha, you were talking about PAT. Okay, I was talking about margin. So basically, PAT, you are saying 3.5 to 4% is maintainable, right?
Yeah, it is quite sustainable margin. Yes.
Okay, okay, thank you.
Thank you so much. Piyush ji.
Thank you. We'll take the next question from Piyush Patel. Please go ahead.
Thank you, sir. I have one follow-up question. Like your capacity utilization stands at 63%. By when will you reach 80 to 90% utilization?
80% without see 75 to 80% by this end of financial year.
Okay, and then what's your plan to expand beyond that in tonnage terms?
That is what I'm saying. I'm planning to install one more set of furnaces what I have installed in previous financial year.
Okay, sir. Okay, sir. Thank you.
Thank you so much.
Thank you, Piyush. Anybody who wishes to ask a question, please use the option of raise hand. We'll take the follow-up question from Chaitanya Gadia. Chaitanya?
Yeah, hi. जैसे आप you are using furnaces, are you using any alternate fuel in the furnaces like biomass pellets and all that? Are you doing anything
Yes,
there?
yes. We have started using that in one small furnaces, and it is successful. Now will shift to that also. We are having plant. See, we are having dual burner in one plant. Dual burner means we can use PNG, we can use oil,
Okay.
depending upon the price. One plant, one shade, we are having electric furnaces, and in one shade we have started using biodegradable, and it is successful, and we'll shift that to the entire plant to biodegradable. So every this make shift is going on, and it will help us in improving our bottom line.
So what you are saying, Yash, is that at all the three types of furnaces that you are operating, can they go on 100% biomass?
No.
Okay, so what is the maximum that you can blend or replace the fuel with? Let's say if you're using coal currently, right?
No.
I'm not using coal. I'm using PNG or furnace oil.
Okay, got it. So how much can you replace that in terms of percentage?
We are starting, we can replace that by 20%, and one shade is electrical.
Okay,
So electrical, we are planning that we'll install solar, so for the captive consumption.
okay,
So that electrical is already a change in our CO2 emission data also. It has helped us in our CO2 emission data also. So that
okay,
electric will not change, and the bigger furnaces we cannot run on biodegradable. So the bigger furnaces will run on fuel, or the furnace oil or the PNG. That we can think of shifting it to electric once it is successful in everything.
okay. Thanks.
Thank you so much.
Thanks, Chaitanya. We'll take the next question from Mronal K. Please go ahead.
Sir, so I just have one question. As of end of September, you were carrying 115 crores of inventory on trailing 12 months, revenue of 483 crore. As of March, we are on 144 CR inventory on turnover of 524 crore revenue. Where do you see it stabilizing in the coming year?
See, we are targeting on that part also, that to maintain this cost, because we are incurring interest cost. If the interest cost would be low, then our EBIT or our PAT margin would be much higher than that. But once this situation gets better, this because of the US-China trade war, what we are doing if we are catering order of, say for example, if we are getting order of 500 tons, then we are taking inventory into account of somewhere around 1,000-1,200 tons, because double the inventory, because this China-US war, the price fluctuation is going on tremendously. So we don't want to get affected by that. The supply, or the supply of the scrap, the Euro US gap, and the electricity problem in Europe is going on. Because of all such issues, we are keeping a high level of inventory to sustain or to sell our product without any disturbance, and at delivery, what we have committed on delivery on time. So in coming 2-3 years, you'll see that this situation will get better, and I hope this you'll able to see from this financial year. Starting from this financial year, the situation will get better, because we have maintained that cycle now. Even if 1 month or 2 months the disturbance is there in the supply, then we have that sufficient stock that we can manage that part. Hello.
Thank you, Mronal. Sir, there is a question on the chat from Ravinder Bir Singh. He is asking, can you share the reason for fall in exports in FY25?
Because Japan is going slow. We were exporting the same to Japan a lot. So Japan is going slow. So we work with Japanese closely, but the prices in India is much better, and the prices in Japan were not quite competitive. So we have exported less.
So going ahead, will the trend remain the same or it will improve?
Maybe the same.
Maybe the same.
Yeah.
Thank you, sir. We'll take the next question from Harsh Maru.
Just,
Please
just
go
to
ahead.
add, just to add to that
Yes.
point, we were not dependent on export at all. Huh?
Okay.
We are not at all dependent on export.
Right, sir. We'll take the next question from Harsh Maru. Please go ahead.
Yeah, thank you. Yash ji, आपके लिए the first question is you spoke about 2 expansion projects.
Yeah.
So आप अगर उस पर थोड़ा और बात कर सकते हो in terms of what is the progress, when do we expect the commissioning to happen, and what is the kind of capex outlay that you are looking at?
I'm hoping that the commissioning of these projects, one by one project will be commissioned by this financial year end.
Okay, and the second one would go to FY27?
The shade and everything would be under same roof, so everything would be there. Only the furnace and everything will take step by step. We'll do one this, and after running 1 quarter half yearly that, then by the next of the second half of next financial year, we'll commission the another project also. But
Right.
it will not take much time and it will not take much cost once the one plant is operational.
Okay. And secondly, in terms of PAT margins, so you spoke of sustainable margins in the range of 3.5 to 5%.
And
So,
yeah.
right. So broadly in that range. So in terms of modernization of equipment, how much is left which could add up to these margins?
See, the modernization is ever growing process. Your my answer to your question is I cannot answer as such. The technology shift, the modernization, the improvement, every here and there it can be done because the technology shift goes on year. So even if, see, in our industry, if I'm producing 18,000 tons, if modernization in raw material processing cost or the employee cost, if I'm able to, you can say, if I'm able to reduce half a rupee per kg, 500 rupees per ton, it makes lot of difference to my bottom line. So this half rupee, 1 rupee, 1.5 rupee, 2 rupee, it can be, it is an ongoing process.
Okay. And lastly, in terms of competition, other than Arfin, do you see any other competition for your business in India?
There are a lot of competition. Arfin is a listed player. That is why I've told the Arfin example. But other from Arfin, the competition is more. The industry is quite. You can say the industry is quite fragmented. So the competition or the everyone has their own market. We are producing a lot of niche alloys, so we have our own market. That is why you'll always see the PAT margin would better or the bottom line would be better rather than in comparatively top line, because we are targeting niche product or the niche alloys. And there are a lot of competitions, but the industries is quite fragmented. Yeah, at top level the capacity, or at the top level, if you can see, then there are 10-15 players in the industry which is at the same level.
Okay. Thank you so much and all the best.
Thank you so much. Thank you.
Thanks, Harsh. Sir, before moving on to Mrunal K, we'll just take a question from the chat. Ravinder Bir Singh asks, can you tell how you are moving towards carbon credits and extended producer responsibility as you are into recycling?
EPR is first of all, EPR is not applicable to recycling of metal. It is
Okay.
applicable to green the e-waste and the rubber waste and the
Okay.
plastic waste. It is not applicable to metal. Secondly, क्या पूछा था मोहसिन जी? Secondly,
How you are moving towards carbon credits and extended
so
producer responsibility.
so EPR, I have told you
Ha,
about
ha,
EPR,
correct.
and the carbon credit. We are maintaining the carbon credit data since last 4 years, and we are falling in the same range. We are falling in the good range of the carbon credit. It is not mandatory for Indian companies to maintain the carbon, the CO2 data, the GHG, the greenhouse gases data, but we are maintaining since last 4 years. That is why we are getting added advantage. We have shifted our one shed, as I've told you earlier in the con call also. We have shifted our one shed into the electrical shade, which is helping us in which is helping us in reducing carbon emissions. We are shifting to the biodegradable furnaces, the biodegradable fuel, which is helping in our carbon emissions. The technology shift is helping us in our carbon emissions.
Okay.
So we are having that environmental policy with us. So we are closely associated with our the consultant of the CO2, the carbon credit consultant, which is maintaining the data and which is helping us in going forward, how we can reduce our carbon emissions.
Okay, sir. Thank you. Sir, we'll take the next question from Mronal K. Please go ahead.
So, there is one follow-up question on working capital. Your
Yeah.
trade receivables have also increased from 48 crore to 72 crores, which is from 41 days to 50 days. What is the leading to this phenomena, and where do you think this will settle in terms of days?
See, in general phenomena, the business module is in such a way that if we are selling it to automobile industry or the electrical equipment industry, the category is aluminum alloy. We are targeting more on aluminum parts, aluminum alloy, to sell it to different automobiles or the OEMs or the electrical equipment manufacturers. The normal credit terms ranges from 45 to 90 days. That is why you will see the receivable has increased because of the increase in revenue, and the debtors day, as you have told, the receivable days has also increased because of the component, which we are selling it to the companies. They are taking on a credit basis. As I have mentioned you the way forward in our South Indian market. Previous 5 6 months, 4 5 months, we have targeted South Indian market, and we are getting regularly order from Ashok Leyland Group, Ashley All Teams. So Ashley All Teams credit period is 60 days. So overall the cycle would be of 60 days. So anywhere between 45 to 60 days, the receivable days are quite good in our industry norms. I hope I have clear, Mrunal.
Mronal, are you?
Yes.
Okay.
Yes, thank you, sir.
Thank you so
Thank
much.
you, Mronal. We'll take the next question from Dheeraj. Dheeraj, please go ahead. Yeah.
Yeah, just an follow-up from on the working capital. The question is not on the growth on the revenue side, but the balance sheet seems to be deteriorating with higher borrowings as you grow, and the cash flows are also negative. In the last 5 years, your debt has almost gone up by 5x. So, is this sustainable? Because negative cash flows, higher borrowings every time when you grow, how will you attain 15 to 20% growth rates without raising capital or raising debt? I think the business model has issues on the balance sheet side. How would you repair that part?
Manojji, can you explain?
Yes, sir.
Yeah.
Actually, increasing with the top line, we requiring the much more working capital, because as you look to our balance sheet, the receivable is also increasing, the inventory is also increasing. So with the increasing of the volume, we require much more working capital. That's why the debt is increasing accordingly. But meanwhile, or by this financial year or by incoming financial year, we are work on it to the not to increasing the debt and maintain the debt as it is with the increasing of the top line.
No, but how will you attain unless you structurally pare down the working capital cycle, which is unlikely um, to easily prune down? How will you
Sir,
manage that growth rates without changing the working capital cycle itself?
actually, some customer base are increasing. If you look at the clientele side of our presentation, we added a 15 to 16 customer base in this year. From them, we are receiving the trial orders. If the all gets done from them, then the repetitive orders will be in a better terms.
And
Yeah,
Dheeraj ji,
better terms. Can you materially explain what better terms will that
I'll tell you.
become?
I'll tell you. What,
Again,
what he's trying to say that for trial orders, they have a good discounting facility at 7% per annum interest rate. The Ashok Leyland Group, the TVS Group. So what we are targeting now is that we'll get that transactional facilities or the discounted facilities which we are getting at less than our CC rate from them. So we'll for trial orders we cannot say anything to them because the discounting ones. So once we'll pass through that trial order, because in aluminum alloy industry it takes 6 months minimum to pass through that trial order because of the homogeneity issue in the material. because one ingot is of 5 to 6 kgs, and when they are asking 500 tons, then you can imagine how many ingots would be there. So they want to check the homogeneity. So once everything is settled down, then we'll take the discounting facilities from them, and it will help us in our rotation policy, and will capitalize our stock these issues. As you have seen earlier also in the morning, this US China trade agreement, trade negotiation, and many issues are getting calmed down, so that will not be able to require keep stocks at such high levels.
Okay. The discounting will reduce the margins. It will be a cost factor for you.
See, if I'm for 60 days interest cost, I'll tell you one thing. The payment terms would be 60 days. For 60 days, I'll quote accordingly how many cycle I could have rotated in immediate payment. So I'll add to that margin on the basis of 60 days, and I'll get the payment at 7%.
Eventually, we are using the banking finance. Instead of using the bank finance, we are using the discounting facility. And as you already explained, that facility is the lower rate of interest than the what bank offering to us. So ultimately, bottom line is not impacted. Your answer is bottom line is not impacted.
Okay. The only thing is that so far that remains to be seen how you will manage that part, because the last 4-5 years, the trend on the balance sheet side and the borrowing and the working capital has not seen that kind of an improvement. So we can give that benefit of doubt, which you are suggesting, but that still remains to be seen.
No problem. You'll able to see in the upcoming financials.
Okay. Thank you so much.
Thank you so much.
Thank you, Dheeraj.
We have one more question in the chat. Some more question in the chat from Ravinder Singh. Do you have any confirmed order book or long-term contracts with clients?
Yes. We will announce that soon also. We have received one big order. We'll announce that soon also, and we are maintaining order books.
What is your client repeat ratio?
See, the client repeat ratio since last 5 years, the top 10 customer
contributing the 75% of top revenue.
Yeah, and we are associated with them since long, so you can have an idea about them, the client repeat ratio.
How do you plan to fund your working capital requirement, through debt or equity dilution?
As of now, debt. Will plan as of now through debt.
Yeah. That's it from the chat. Anybody else who wishes to ask a question may use the option of raise hand. So since there are no further questions, would you like to give any closing comments?
Regarding I've got a good question from Dheeraj, from Runal, from Agastya, and everyone. If I'm missing name, will the queries will you'll able to see in this upcoming balance sheet regarding Dheeraj questions. The stock level will get better because we'll utilize that, and the uncertainties in the world is going down. So that is my closing comments, and I'll make we as a Baheti group, we assure you that the things will improve and it will be much better from here on. Thank you.
Sure, sir. Thank you. And thank you to all the participants for joining on the call.
Thanks to all of you.
And thank you to the management team for
Thank
giving
you.
us your time. This brings us to the end of today's conference call.
Thank you.
Thank you.